Hey traders, happy Thanksgiving. Welcome to Charts and Coffee, the Thanksgiving edition. Yeah, am I going to be in my office here for the first for the first hour or so of the morning before the turkey L-tryptophan and food coma kicks in? Well, more importantly, before football starts. 3 games today. I'm a happy girl. So yeah, I take a look at the charts. And after starting to trade Forex back in late 1999, early 2000, one of the things you learn is there are really only 2 holidays for traders every year, and one is New Year's Day and the other is Christmas Day. And the rest of the time, some part of the world is open and trading. So when you trade currencies, that was just a reality. And so, to me, it's just a really good time to take a look at the charts. Remember that the week is pretty much over. We have a half-day session on Friday, which will not be well participated, likely very low volume, just, accounting for any sort of pre-weekend positioning. But, always a good time to take a look at some trends. So happy Thanksgiving, everybody. Let's get into a little bit of charts and coffee. So first of all, I do want to mention this. Right now, and a lot of folks do ask me, Rog, when are the different sales for Simpler? We've got a Thanksgiving sale going on right now, and you can go into the store and check out all sorts of workspaces, different classes. I think they're 30% off a handful. I don't know which ones. I do think my day trading playbook is on there. And there's a whole bunch of great packages. So I wanted to mention because now's the time to save on maybe some of those courses that you've been eyeing throughout the year. So yes, thank you for those of you that are taking a break from the Black Friday shopping before the turkey and the football. Let's get into some questions. So as always, phone lines are open for your requests. Feel free to type in whatever symbol or question you have. And there's a few things that I think not only as we wind down November, Monday and Tuesday, normal end of month trading sessions. To wind down November, what are those trends that we are seeing going into December? Now, I've been getting a lot of questions about Santa rally versus Raghee. What is this window dressing thing you're talking about? And also Santa, window dressing, and end of year. They're all kind of the same thing, kind of. All right. So I'm going to show you a little bit of a seasonal chart. I don't follow seasonals blindly at all. And you don't need to, but I think it's kind of cool to be able to look back 5 years, 10 years, and look at a composite of the seasonal tendencies. Seasonals are not setups. Tendencies are not trades, but there is sort of an expectation for this kind of movement. So take a look here. This is the SPY, S&P ETF, on a 1-year seasonal. The pink line is today. And you'll notice that when does this year-end rally usually begin? If I'm looking at a 5-year composite, what does that mean? It's the look back. How many years are we looking for this rhythm, for this cycle? And for me, I've always noticed that trick or treat is not just for kids. It starts what I believe to be that amplification of bullishness going into the end of the year. We're looking at the last quarter of the year, etc. So October tends to be pretty commonly where I will look at the end of year rally beginning. All right, notice that going into Thanksgiving, and it's not precise, right? But going into Thanksgiving, we start to see a little bit of a pullback from around Thanksgiving to just before Christmas. We see another little pullback. So this is where I would say, yeah, you can see the dates here. See that low right there is the 23rd, 24th. That low right there is November 20th. That low right there is the 28th. So you can see it's not precise, but within about a 5-day window what the tendency tends to be. So yeah, I believe that the pullback we're seeing now is sort of phase, if you want to look at it this way, phase 2, October 2, or trick or treat, Halloween to Thanksgiving, Thanksgiving to just before Christmas, and then Christmas into the new year. Those are your sort of three phases of this year-end rally. And then mixed up within all that, especially going into the December trading month, is this idea of window dressing. Now, window dressing is not only going to emphasize what is, it's going to benefit what is already strong. It's also going to, you're going to see an unceremonious dump of what's been underperforming. Here at Simpler, it's probably otherwise known as, say, our tax loss harvesting, right? What do we want to ditch that, off our books to, look, think about window dressing. What is it? If you're in a big city and you're walking by all these gorgeous windows, how do they compel you to walk into the store? They make a great window display. How is it any different than the year of end portfolio dressing? That's where it comes from. Does everybody do this? No, I'm not going to point a finger at all of Wall Street and say, hey, you guys are putting together some great window displays to entice investors. But let's face it, business is business. And that's okay, as long as we know the rhythm of these things. So that's the end of year. I hope that makes sense, because that's the rhythm. That's the Santa rally is really right around Christmas to the end of the year. But to minimize this entire October, November, really end of October, November, December move as just a Santa rally is just sort of incomplete. So hope that helps with some of the trading technobabble of all these descriptions that we like to use for market behavior. All right. So with that being said, let's jump on over to the charts, and three trends I would love for you to keep an eye on: long dollar, long indices, with an emphasis on, and we'll see that continue to organize with an emphasis on those specific sectors and stocks that are strong. Remember, as we go into window dressing, strong gets stronger, weak gets the axe. All right. So again, happy thanks. Good to see you all. Good to see you all. All right. Can we take a peek at Google? Yeah, of course. So Goog and Google. Really interesting. When you look at Google, it's just easy to compartmentalize it into a NASDAQ or S&P conversation, but it's also a part of this conversation. So I was talking to the mastery members and the futures folks about, there's an interesting fade that we can look at with the 75 calls for Jan 21 Jan expiry, 21st of January. And it's really predicated on this VWAP and this 200 exponential holding, right? And so why do I bring this up with Goog and Google? Your top three weighted stocks within that ETF are Facebook, Goog, and Google. And so the communication sector may not look so good. Largely the problem is the IYZ, the telecommunications. All those telecommunication stocks that are lower weighted within the XLC, they're just a straight up dumpster fire. There's your IYZ. This is Comcast, T, VZ, those telecommunication stocks, which are also heavily weighted within XLC. So what you have with Goog and Google are relative outperformers. What you have with Facebook is a lot of chop. What you have with XLC is that maybe, just maybe, Google can help this overall tide move higher. So Google would be the relative outperformer, but let's face it, it's spendy. It's a spendy name to trade. Likely put credit spreads or call verticals to go into that kind of name. If you're interested in that, this is not as good a pure play on the strength, but that could be an interesting bounce on XLC. So I like the long. I'm with you there. AJ? Yeah, I like the long on Goog and Google. It's a double green. It's pulled back to the wave. What's not to like about it? I'm with you there. All right, next up, can we take a look at, hey there, Darius, can we take a look at Block? Sure. So we have the Amplified Transformational Data Sharing ETF. They've got an ETF for everything, don't they? So in order to understand Block better, as opposed to just looking at its structure, which we do want to start with, there's two things we want to figure out next: high concentration weighted or not, and then what are the stocks held within it. This is not a high concentration weighted ETF, but this is things like NVIDIA, Coin, Hive, Mara, Riot. Interesting Overstock, interesting group of names. Uh, I like the pullback here. It's a pretty dramatic one because we'd gone parabolic for a period of time through mid-October to mid-November, and now we're pulling back pretty hard. But the thing that's standing out to me pretty darn nicely is that volume ledge sitting at about 54.30, 54.30, just in front of the 55 propulsion. Pretty interesting support level that we could see. And then a little bit of resistance sitting at about 56.50, 56.60. So I think there's a battle going on in between those two volume ledges. Support, you want to see the lower volume ledge act as support, and we want to see that the upper volume ledge right there is going to be broken, because that's where, if we run stops through that level, it's kind of like a catapulting type reaction. So that's what I see there on block. Battlehawk asks, what is the smallest account worth trading? It depends on the leverage and the market you're trading. I mean, you could trade pretty small accounts with Forex. The leverage is very high. You can trade pretty small accounts with options. You would just have to be very choosy about this cost of the option that you're trading. So I know there's a lot of folks that like even your penny stock narrative. I think that's very difficult in a non-overall, look, 2020 was great for penny stocks. Inexpensive, very inexpensive, sub 10, sub $5 type stocks. This year's been brutal for them because it's just not the right environment. That's a tough question to answer, Battlehawk, because I would rather, if you're looking at a very, very, and I don't know what small is, right? For some people under 25 is small. For some people under 10 is small. For some people under 5 is small. But I think that certain markets are more suited to smaller accounts because of the leverage that they offer. So you can get a little bit more bang for your buck. But overall, I wouldn't start trading, period, with probably less than $5,000. And you'd have to be very, very selective about cost and risk as you grow that account to something a little bit more sizable, where you can take those rough days, because they're inevitably going to happen, those gap downs, things like that. So I really don't have a great answer to that, but I would say when people ask me what should I start with, my usual answer, what's the least amount I could start with? I'd say 5 to 7,500, 5,000 to 7,500. And then, if you're trading Forex, trade micros and minis. If you're trading futures, there's more micros than ever. If you're trading stock options, stick with very low cost stock options. We just got into UUP calls 2 weeks ago. We've been playing dollar index for dollar and euro for about 6 weeks now. And the UUP calls that we bought, and not just me, but the rest of the members in Mastery, I think we paid an average of about 30 cents, give or take a nickel in either direction. 30 cents. So yeah, I'm talking $30 options. So they are out there, but you've got to have the mentality of, no, you're not going to trade NVIDIA. No, you're not going to trade Google and Tesla and these far more expensive names, but there are less expensive, scalable options to get into. So I hope that helps. Are there any indices to keep track of all commodities? So AJ, just like we would look at the sectors within the stocks. So if I'm looking at the NASDAQ, I'm looking at XLK, CY. If I'm looking at the S&P, I'm looking at XLK, FV, etc. So we know that inside these indices are sectors, inside those sectors are the stocks. Think of commodities in that index sector type mentality, where you've got commodities, but then you've got treasuries, metals, energy, softs, grains, meats, etc. And then they're all going to move for different reasons. So currencies, treasuries, indices, and energies tend to move very similarly because they're all affected by central bank policy and risk appetite. Grains, softs, meats, they move differently. They're far more seasonally sensitive. They're going to be sensitive to the weather, which impacts planting and the whole process to harvesting and transportation and storage. All that's going to be affected. So there's not a lot of overlap between those groups. So when you're trying to keep track of all commodities, what I would say is you need to get specific, sort of, if you want to use that mindset, to the sector. What's happening in grains is not necessarily going to affect what's happening in metals. Now, there are some neat companies you can look at, from Archer Daniel Midland to the Moot ETF. There are, you can look at I believe it's, I'm trying to think, the Goldman Commodity Index. There's a number of indices, but treat them the way you would the S&P. Treat them the way you would the way I teach you to look at the NAS, which is understand the components within them. And if you do that, you're fine. But just be careful looking at them all together, because a strong dollar play is going to have a different impact down the line on stocks, and a different impact down the line on, say, energies. And a strong dollar could be very different impact on grains and softs. Weather is going to impact, say, cocoa, but the 10-year bond could care less, right? So you see the catalysts for movement are so different. Thanks for the question, though. Is SHIB worth buying? The Shiba Inu? I don't have any skin in that game, Jimmy Soul. I'm a fan of the stable coins, and I try to avoid sort of the meme coins. Not that Shiba Inu is a meme, but I'm much more a Bitcoin type focus. I'm not gonna even pretend to be fluent across all the different crypto, but I chart them all. So here's the bottom line: if you're looking at crypto and you want to pull up SHIB versus US dollar, let's do that here real quick. Chart it. I chart it like I would chart anything else. So I'll go back to structure, I'll go back to volume, I'll go back to grab candles. And if this, if you have a liquid symbol, regardless of the asset class, crypto, Forex, futures, options, stocks, ETF, whatever, regardless of that group, as long as it's liquid, you can absolutely take advantage of the same tools and analysis that I use. So I would analyze SHIB versus US dollar the same way that I would analyze, same tools that I would analyze euro versus US dollar. Okay. So it's probably better to buy down here than it was up here, right? So I would say we're at the bottom of the range. That's far more my jam than not. Okay. So thanks for the question. All right. Next up is, will there be will we have Q&A tomorrow? Oh, that's a really good question. Are we going to have Q&A tomorrow for the mastery? I have a session between 9 and 10 tomorrow, and then the market closes at noon. So probably not. Yeah, probably not. But if something changes between now and then, myself or Lorna, for those of you that are part of the Sector Secrets Mastery, we will let you know if something changes in terms of doing that Q&A session. But if not, I'll see you all next week. And but thanks for the question. With the Friday being the way that it is, Robert, I hadn't really thought about the fact that we're calling it a day. It's a half day. You know what I'd say? Enjoy time with your friends and family. Go check out one of the courses that we have. Go check out some of the videos of the Learning Center in the Mastery, and give yourself a nice long break. But thanks for the question. All right, next up is thank you. Happy Thanksgiving to all of y'all, and I appreciate y'all being here. Gosh, fantastic. What levels do I look for to go short on the euro? Oh, all right. I love all these, whether it's cryptocurrency or currency. I love talking money. All right. So we need a rip, which is to say we need a bounce. And I'd like to see something at least to the 114 handle. Anything closer to the 115 handle, 114.00, 115.00 would be great. Anything really at the 55 would be awesome. Now, you might say, Rog, that's a long way to go. It's true. It's true. I think that the acceleration that we're seeing as the market's digesting what taper means to the dollar strength and what that then means the euro weakness is definitely in play. But I would just need some sort of bounce. 114 would probably be for me as minimal a bounce as I would be looking to take advantage of. And a lot of that has to do with the fact that, we already have Jan 21 UUP calls that we bought in this area. And the only challenge, if I could go back in time and do this again, I probably would have considered the Euro event that we had on the 28th as a secondary or even the primary timing for the entry. But my concern was if the euro just shot lower, the dollar would have headed higher and we would have missed our opportunity altogether. So these pullbacks are likely going to come with data events that are very euro or dollar impactful, central bank events, and ongoing narratives about what the ECB could be doing with their monetary policy, and of course, what the FOMC is going to be doing. So keep a really close eye on Christine Lagarde events, on Jerome Powell events. Those could be movers that give us either the pullback in the dollar index or, to your point, the bounce in the euro that we could take advantage of. And please remember, this is a trade that, again, even though I'm talking about this as far as a trade that we have on, I am looking for reentry. Like I said, we've been in this and watching this for about 6 weeks now, and it's starting to get more and more attention. That's, for me, always a problem. I like to get in on some of these trends that are structurally sound before everyone's got their eyes on them. So this is now a pretty popular place to be looking: long dollars, short euro. So it's going to be a little bit more volatile likely from here on out, but I think the trend is in place. So what I would say is, if you want to control risk, there are micros in the euro. There are, of course, micros in the Forex for euro, but there are also puts we can buy for the FXE ETF, which is pretty darn liquid. And there are calls we can buy with the UUP ETF. So this doesn't have to be a currency futures or foreign exchange conversation. This is definitely something that even stock options traders could easily take advantage of. So cool for the question. Yeah, we need a bounce. Pull back in the dollar, bounce in the euro, 6 of one, half dozen the other. But they are the same trade. The euro short by way of puts is just a more direct play on the US dollar. All right. Semiconductors, sure. Semiconductors and ADI. Semis are strong. Semis are a nice double green. Pullback buys are fine. ADI. So first of all, where is ADI within the weighting? That's always something to know. And then second of all, ADI is pulling back in a more significant way than SMH. And depending upon the weighting, remember, if SMH continues to pull back and ADI is tracking with it, ADI could have a much more significant pullback because their retracements are a little out of sync. SMH is a little bit stronger, ADI is a little bit weaker, but if SMH goes lower, ADI is going to go lower too. So keep in mind that little bit of sync, but they're both viable on pullbacks. Absolutely. As far as a trailing stop on the 6E, the way that I do trailing is using basically volatility, historical volatility. I would say that if you're not using information like that, I'd say 1370 is a pretty good play. Again, I don't know where you're in from, but to me, I would think at this point, 1370 to 114 could be an area to place a trailing stop. My trailing stop is basically going to overlap with that next zone that I'd like to short. So I would say look at where you are positioned from. Take a look at the daily price movement range, that historical volatility, and then just make sure you don't smother the trade. The whole idea of trailing stops is to lock in some profit for sure, better than a break even, but not smother the position, meaning every symbol has a certain amount of movement that it likes to trade. And then if you start to creep in a little too close, you're going to then either you've decided, look, I don't mind to get stopped out if the market moves to this level because you want to protect a certain amount of dollars. I try not to think about the dollars as much as the volatility and thinking about it as a fence. And I want to be just outside the fence, right? So thoughts on BA, maybe a fade as we get down to this area here. Look at the Darvis level starting at 206.60 to about 204.60. That area there is going to be an oversold zone. And if you've got a slow stochastic, that's a great, I like using a slow stochastic. I like using Simpler's ready aim fire. If you've got an oscillator, that's job is to identify overbought and oversold. You've got the non-trending environment. Now all you need to do is wait for the zone, the lower edge. Your edge is at the edge. That's what I've always taught. When you got chop, your advantage, your edge is at the edge. This is the lower edge, oversold, yellow, non-trending environment. Let's see if there's an oversold reading on a slow stochastic or a ready aim fire. Okay. All right. So thank you as always for joining us for a slightly longer charts and coffee episode. I love all the questions. Thank you so much for them. Let me just see if I can rattle through some of these here. I've never experienced my strategy for buying a call vertical. Could identify. That's just a huge conversation. Yeah, Robert, that's definitely a sector secrets conversation. We need a little bit more detail on the setup and the cost and the strike. Yeah, we'll hold that off for a session in sector secrets. How do we know if an ETF is heavily weighted? Go to ETFDB, look at the holdings, look at the percentages. That's it. You can do it in Yahoo Finance, wherever you get your holding percentages. Just look at the percentages and you'll see right away. Oh, 4 or 5 names have a much higher percentage holding than the rest. But ETFDB is really good for that. Is volume ledge the same thing as volume profile? Not entirely. Volume ledges are just showing me all the different volume. Close enough, but I don't use the volume look, to me, volume profile really starts creeping us closer to market profile. And we can use pieces of it: value area high, value area low, point of control. Those are sort of the greatest hits, if you will, of volume profile. Ledges are just all the different areas where we see size has accumulated. And then, of course, it's largely, all of it is largely going to be influenced by the look back, the amount of data that we're looking at. So I'm a big fan of a visible range volume profile or a visible range volume breakdown. So I don't use the one on Thinkorswim. I really like the one on TradingView. All right, let's see. Do I have an educational lessons? Oh gosh, yeah, we have. So we have a learning center within the Sector Secrets. We do a weekly Q&A where I'm on the mic every Wednesday for 2 hours plus, and we go through Q&A, and that's recorded. And we have a Friday sort of technical Ask Me Anything Q&A, and we have a learning center, which is in a section within the mastery where we have a curated list of lessons to help someone get a better sort of running start with the mastery. So as far as for a beginner, I don't know where you are in terms of being a beginner, but I will say that ultimately, if you can buy calls and puts, that's step number one, because that's all I really like to do. And then the rest of the learning curve is really going to be probably the platform, setting alerts, placing alerts, sending in orders, things like that. Okay. So I would say that, a lot of it you're just going to pick up from being in the room. I would say give yourself at least a month. It's an immersion, really. So give yourself about a month. Our members are very active in the room, and we keep the room open so everyone can talk to one another. I'm actively watching and participating in the chat as well, as is Lorna. And so it's a very active room. So what you're going to find is, as you have questions, myself or Lorna are there to help you, but the other members who are probably more recently coming out of some of the challenges, turning the corner, and some of the challenges that you're going to have as you're learning, the learning curve, they're going to be able to chime in and help you too. So, it's really a community that we've developed where we do help each other. It's a positive environment. We're scanning using the same kinds of tools. I just couldn't be happier for the kind of people that we have in that room. Just a really good-hearted group of people who just want to kick butt in the markets. And those are always going to be my kind of people. All right. So, all right, let me let me log off here. I know I've kept you all for about a half an hour. Happy Thanksgiving. Enjoy your Thursday. Got 3 football games tonight. I'm very excited about that today. And so we do more of a Thanksgiving lunch here. I don't like going to sleep on a full stomach, but whenever it is, you're going to enjoy your meal, enjoy some time with your family and your friends. And very grateful for all of you, part of our simpler community, and definitely our caffeinate and dominate crew here at Charts and Coffee. Be good to each other. I'll see you all tomorrow.